All right, hello everyone. Good afternoon, and thanks a lot for joining us. My name is Joseph Ram. I'm the Deputy Country Manager for StashAway MENA, and I'm actually quite excited about today's session, which is part of our new series that we created called the StashAway Money Chat series, where every single month we'll be bringing leaders in the industry to discuss multiple topics about different kind of financial related topics, and today's session about real estate in particularly. I'll be introducing our speakers in a bit, but please, if you guys have any kind of questions, please feel free to add it in the Q&A box. And we're also live on Facebook, so for all of our Facebook viewers, if you have any questions, also you can drop it in the comment section on Facebook. All right, so again, thanks a lot for joining. And we have today our speakers Rami Tabbara, co-founder of Stake, the digital real estate investment platform. Rami, thanks a lot for joining us today. Really excited to have you on the chat.
Thanks a lot, Joseph. Thanks for having me.
Thanks, Rami. Would you mind introducing yourself and Stake for the viewers? You've been on the platform for the first time, so.
Yeah, sure. My name is Rami. I've been in Dubai for the last 16 years. Been part of the real estate market since 2006. Stake was founded with myself and my co-founder Manar close to a year and a half ago is when we got together and started putting the idea, getting the license approved by the DFSA. And we launched January of this year, 2021. Stake is a online digital investment platform that allows people to invest in real estate transparently in under 3 minutes. We focus on ready real estate and allow people to earn income for as low as $500.
Thanks, Rami. Appreciate it. And we'll deep dive more into Stake in just a bit. But I also would like to introduce Ramsey, General Manager of StashAway MENA. Thanks a lot, Ramsey, for joining. Rami, it's going to be a bit confusing, by the way.
It happens a lot, actually. People in the emails and things, they say Rami a lot. They call me Rami. I think Rami maybe is a little bit more common than Ramsey, but we'll make it work.
So thanks a lot, Ramsey, for joining. Also, would you mind introducing yourself and StashAway? You've obviously been on the platform from the launch, but for the new viewers.
Yeah, so for those of you who haven't joined us before, my name is Ramsey Fleif. I'm the general manager for StashAway. I have over a decade's experience predominantly in the region, starting off in kind of finance, private equity, post MBA, getting into management consulting, specifically strategy consulting with Booz & Company. And then I got into the kind of tech startup-ish kind of space, working with Kareem, the ride-hailing application for a few years, starting off in their strategy team, ending as head of corporate for the region. And then after the Uber acquisition, joined StashAway to launch and then lead the operations for the MENA region. So kind of similar to Rami, dealing with the regulations and the licensing and all the fun stuff involved in kind of getting your business started. So maybe just a quick intro on StashAway. So StashAway is a digital wealth manager, or what's more commonly known as a robo-advisor. So we take a digital-first approach to managing your wealth or managing your investments. And it's specifically a risk-based approach. So based on the risk level that's appropriate for you, which we assess based on kind of your personal situation. So your income, marital status, family size, etc. Your individual risk tolerance, which we also assess, and then your financial goals. So whether it's retirement, saving for a house, saving to start your own business, whatever that may be, we recommend a risk profile for you, and that's tied to a predetermined portfolio that we've created that includes a number of globally diversified asset classes, including bonds, equities, real estate, and commodities. And so today's focus will be on real estate, of course.
Thanks, Ramsey. Appreciate it. All right, so just before deep diving into the real estate market in general, and more specifically about the UAE, Rami, so you launched Stake also with your co-founder Manar, as you said, about a year and a half ago, and you also raised a Series A funding not so long back. So first of all, congratulations on this.
Thank you. It was our seed round, actually.
Sorry? It was a seed round. Sorry. Okay.
It was it was our seed round. Yeah.
So congratulations for this.
Thank you.
Really looking forward to seeing Stake going above and beyond in that industry. But my question for you, so you launched Stake in the midst of one of the biggest global financial market crises that happened back in 2020. Obviously the COVID crash. So why did you pick that timing in particularly? And two, what's the gap? So you've been in the market, in the real estate market for more about 15 years now. And so what's the gap that you've seen in the market also that triggered you to launch Stake with your co-founder?
So I'll start off with that question first. And, I think being in the market for so long, as you mentioned, it's closer to 16 years now. And I've worked for some of the top developers in Dubai, is working with, seeing where the gaps are with just how much money comes into Dubai. This year we're on pace to hitting 100 billion dirhams worth of money invested. I mean, we're already crossed 60 billion dirhams of money poured into the real estate market here. So, over the years, I've seen how much inefficiencies there are in the market. It's particularly with retail investors who come in, putting money into the market here, and there's no transparency. So, there's a lot of people that there's misalignment, brokers and developers, some of the brokers and developers were selling product with returns that didn't make sense to investors. And I would see that firsthand, and they would end up, investors would put in their life savings or their children's college funds into properties with the hopes or the promises of getting returns that they never did. And most of the money at the time was going into off-plan. So people were putting money into products that weren't built. So they were paying across 4 or 5 years, we're seeing no returns. And that didn't make sense. And then, throughout the years dealing with retail investors, I sat down with so many investors who couldn't afford to buy real estate. They wanted to participate in this asset class, and they just, couldn't either get a mortgage or didn't have the means to put down a big down payment. And if you look at the market here, the majority of the investors are non-resident, and getting a mortgage as a non-resident is even harder than getting one as a resident. So, I saw a big gap of people that just couldn't get onto the property ladder. So, transparency and affordability were two things that were like, okay, listen, if we can tap into this, then, there's a market there. And as I mentioned, it's already a huge market here. And then, to answer your first question, which was on Corona and COVID and launching this during COVID, is, it happened. Manar and I, we decided to start this business way before, the pandemic happened. I actually left my job in the middle of the pandemic because, I realized that now is the time to do this. And I actually think COVID helped us a lot. If you look at the world right now, there's historic levels of people buying real estate. In the US, there's a shortage of 5 million houses. In Dubai right now, as I mentioned, the market's going crazy. COVID helped real estate. And I think, residential real estate is more important than it ever was. People are working from home a lot more than they used to. It's a lot more acceptable. And people throughout whatever happened in COVID, rent still had to be paid. So actually COVID helped us a lot. And I'll add to that people are a lot more comfortable doing things online, right? Because of COVID. So, and investing, whether it's, on StashAway or on Stake, people are a lot more comfortable doing things online. So, that really helped us and pushed us to say, listen, now is the time to do it. And thankfully we actually went to business this year in January and we've seen fantastic results.
Absolutely. Thank you. And you're absolutely right on the fact that a lot of people are, working now from home. Home is basically the main office for everybody. So might as well invest in a real one or a decent and proper one for the long run. So absolutely. And we will go deeper into that topic in just a bit. But Ramsey, here in StashAway, we really, preach a lot about diversification of your portfolio. And within StashAway, you can invest, obviously, using ETFs. You can invest in the equity market, the bond, the commodity, and obviously on the real estate front. But my question to you is, how important is that real estate asset class to invest in? And assume that someone doesn't invest in real estate, what's the opportunity cost here? So why is that asset class so important to have in a well-diversified portfolio?
Yeah, so there's a lot of different ways to invest in real estate. And it is, regardless of the method that you choose to invest in it, and we'll talk about those, I think, in a bit, but it is a hugely important asset class to have in your portfolio. So whether it's kind of owning your own home or owning it for investment purposes. That choice also kind of will change your reasoning and change your allocation. But it's massively important because the important thing about a diversified portfolio is that not everything is it depends on your risk level. So if you're only investing in real estate, that's probably something that you should not be doing, and all of your wealth is tied up in that, versus all of your wealth is tied up in equities. That's also something that you should not be doing. You need to have, depending on, so like what I was talking about earlier, depending on your risk tolerance, that'll determine what the asset allocation would look like. But in most kind of situations, you should have some real estate exposure, whether it is your own home or it is an investment that you do hold. And so that percentage allocation will be different based on your individual risk tolerance, based on the portfolio that makes sense for you. And that's determined by kind of tools like StashAway and other wealth managers that kind of based on your situation, based on your risk tolerance, then we recommend an optimum portfolio that maximizes the potential returns at each given risk level. And so real estate is a big important part of that because it adds to that correlation. So not all asset classes are supposed to move up together. Not all asset classes are supposed to move down together. Otherwise, that defeats the purpose of diversification. So depending on the macro environment and the economic environment which we are in, sometimes things will move up, sometimes things will move down. But what's most important is how they move together as a basket based on kind of what's going on in the situation. And so, like we said, we saw the crash happening, which Rami was talking about. COVID overall was very good for real estate, but it also depends when you got into real estate. So if you bought just before the crash, maybe not so much, but afterwards it created a massive opportunity. There was a big glut, and then people started driving, kind of coming in. And if we look at some of the data, it's also quite interesting because you have it's reached kind of almost record lows over the last 2 years ago compared to kind of like over the last 10 years, not quite. But then it shows that you have a massive potential for upside as well.
Exactly. Rami, do you want to put or give your opinion on that?
Yeah, I'm a strong believer of, and I'm speaking very objectively here. We represent real estate, and we believe in real estate as an asset class. But I believe in the 20% rule. At least 20% of your portfolio should be in alternative assets, specifically real estate. And I've been a big believer of it ever since I was young. I've been buying real estate, and I think it's definitely a great asset to have. But I also strongly believe in diversification. You shouldn't be putting everything into one asset class. So, I think the 20% rule is what I believe in, and I think that having a very well diversified portfolio is the key to success and making sure that you're creating a very well balanced portfolio.
Interesting. And I want to take a bit step back and discuss about the real estate market in general, and more specifically about the UAE one. And Ramsey, you did mention in your explanation that we've seen a lot of ups and downs in the UAE market, and actually it's been a roller coaster over the last 2 decades. If I see the stats in front of me, the real estate, the property price index actually peaked in 2008, and then it crashed just after the financial market crisis that happened in 2008. And then in 2011, it picked up again all the way to 2014. And in 2014, it dropped back to 2020, just after the COVID crash. And now we're seeing an upward trend again. So it's really been a roller coaster of going up and down. And my question for you, Rami, is in 2014, what actually happened for the market to take this much of a hit all the way to 2020? So 6 years of downfall in the prices of the market, while the SP 500 or even other property or real estate markets were performing quite well across the globe. But here, more specifically in the UAE, it was dropping a lot. So what was the reason for that? That's number one. And number two, what was the reason for its upward trend right now? So a lot of people are buying a lot of villas, a lot of apartments around Dubai and the UAE, and people are still riding the wave just for now. So it's not a small period. So it's actually growing.
Yeah. Well, I think, people tend to I know that in 2014, the market started to cool down and the numbers started dropping. But again, even in 2020 and 2019, you're seeing $20 to $25 billion worth of transactions, which is still considerable. But I think people get I think Dubai real estate is a topic that people love to discuss. It's everyone talks about it. They love to hate it. Some people love to hate on it. Some people try to overblow what's going on and over exaggerate what's going on. But I think what the major reason was oversupply. I think when the financial crisis happened that you mentioned in 2008, 2009, it kind of slowed down the market. And then when it started picking up, a lot of developers just started building anything. As long as they were selling on a brochure, people were standing in line and buying property. As long as they were selling, they kept on building. So, one of them was obviously oversupply and developments that were being built that didn't make sense. And that obviously led to an imbalance between supply and demand. And then you also had political instability. We had a lot of regional issues. You had the price of oil dropping. So, those are the three main things. And I think, as we got closer to right before COVID, in 2019, Zionist Sheikh Mohammed introduced the Higher Committee for Supply to ensure that there's a control and sitting down with developers to make sure that the developments that they introduce are ones that make sense and of value. So that obviously was a huge positive sentiment to the market. And it's, considerably, it's added a lot of kind of not a watchdog, but it's added a lot of checks and balances to what developers are going to release. But then, the way Dubai, after, to answer your question as well, is, that's what happened in 2014 that caused the slowdown. What happened then to get the market to pick up again is, COVID was a blessing in disguise for Dubai. And it's when you say that to people, they're like, yeah, but all over the world it's been an economic slowdown. I think it's one of the best things that's happened to Dubai, and Dubai tends to thrive on chaos around the world. A lot of money comes into Dubai, and I think the way they reacted to COVID was fantastic. They were one of the first cities to open up. Vaccinations. And I think, if you were locked up anywhere in the world, where else would you go? And Dubai was really advertising as an open city. So a lot of people realized, hey, listen, I want to come to Dubai. They saw how amazing the city is, the value for money that you get. It was amazing. And I think that a lot of money started coming in where people were realizing, listen, taxes and COVID lockdowns, why not come to Dubai? And I also think what COVID did as well is it shook the developers and they stopped building. So that shrunk the supply, which was also a huge beneficial thing for the market. And then finally, as well, all the things that they've introduced, the golden visa, long-term visas, the 10-year visas, the 5-year visas, the retirement visas. I think if you look at what's going on right now is people who are coming here thinking, oh, listen, I'll come to Dubai for 2 or 3 years. Now are saying, listen, this is home. I want to be here. This is a place for my family and kids. It's very safe. And you see that right now. I was reading an article yesterday that 83% of the people who've taken mortgages so far in 2021 and up to 2020 are buying for homes for living in, not investment. So you're seeing a big trend of the market right now, exactly. Where even off. Yeah, there's a huge shift, and there's a huge shift into the secondary market, which means people are buying ready homes to move into. So, and I really see this trend continuing. I see this as a place, the pandemic is still there, and you look at all these places that are closing and they're not getting vaccinated, and they're thinking about a lockdown after a third wave, and Dubai has really established itself. So, I really see that all of this is going to be positive for the market, and it's not just a short-term thing. I really see this run going for a while.
Absolutely, and for you, Ramsey, you've been living here in the UAE for quite some time. So you've seen Dubai being built from scratch, basically. Also.
Yeah. So not to disclose how old I am, but I've been here on and off the first time since 1993. Obviously, I was very young back then. It was part of my parents' work, but yeah. So I saw there was when Sheikh Zayed Road it was a road. That's why it's called Sheikh Zayed Road. It wasn't a highway back then, and the trade center was the tallest building and basically the only kind of high rise. And then you saw the development of Marina and the digging of it. And now it's just this ginormous sprawling city, which is fantastic. And so to benefit from it and be here and see that is a great experience. But to go to your questions, so just like most asset classes, there's an element of cyclicality, right? So not everything kind of goes up in a linear line forever without any kind of fluctuations and corrections. And so this real estate is no different, and it's part of that. So it shouldn't deter you from investing or wanting to invest in it. It all comes back to also your what your purpose is and what you want to achieve in it. And so the market here is starting to mature and is developed a lot. Specifically the real estate market since it first started when off-plan sales started in like the early 2000s. So over the last 20 years, it's really come a long way. And now, like Rami was saying, with all these additional visas, with people buying more long-term, with the mortgage now shifting to end users. So end users bring more stability because it's no longer, or not no longer, it's becoming less so a speculative asset. And so that's where it makes even more sense to have it as part of your portfolio. So it's not something that has it going forward. It shouldn't have as large a volatility as it used to have. Of course, volatility is part of every asset class, and that's why you diversify. But so it's an ever evolving thing.
Exactly. And yeah, you mentioned that Shazad wrote this rule because it was like a straight line and there's a desert on its left and on its right. But again, Dubai and especially the UAE have, was developed over the years, and we've seen multiple regions, shifting from the hub, to new hubs, and we're gonna probably be seeing that over the long run. Sharjah was one of the best, kind of city. It was very well developed back in the days. It still is at the moment, but people were still were going to Sharjah to live, and then here in the UAE, Dera started being developed quite well, and then Marina, downtown, DIFC. So according to you, Rami, what would be the region in the UAE to invest in at the moment? So, and maybe also 5 or 10 years down the line.
Part of our ethos and mission and what we drive on always at stake is we only go for prime locations. And I think we've seen time and time again that when the market drops, and then picks up again, it always picks up in the prime locations. And I think, when you look at the market today, yes, there's new areas being built and, Dubai South and where the new airport's going to be. But I think the main areas or the established areas that you have, such as downtown Dubai, such as DIFC, Palm Jumeirah, Dubai Marina, I think those are the locations which I would always, invest in. And you see, there's an article that came out yesterday with Property Finder saying that the rents in downtown and Dubai Marina have started picking up. So I would definitely focus on those prime areas, and where I see in the next areas to be to look at investing is there's the Dubai Creek, which is a very interesting development. I don't know if you've been down there, and if you haven't, I think it's definitely worth a drive. Dubai Creek is it's beautifully done, and I think that's somewhere in the future to keep an eye on. And then all the developments are happening on the Jumeirah coast, where La Mer and where developers like Dubai Holding, Veras have built beautiful waterfront properties all the way, even Bulgari and Jumeirah Island, Jumeirah Bay. Obviously, there's different price ranges, but anything that's close to the water that they're building right now is fantastic. But again, prime, we're big believers of prime. Capital preservation, capital appreciation, vacancy risk is a lot less in prime areas like the ones I mentioned.
Yeah, and then so unlike other asset classes, it's location. That's like really the most important thing in real estate in general, especially if you want stability, kind of long-term returns, and you want it to be an investment as opposed to just where you live and where you're going to spend X number of years kind of in. Even then you want it to make sense for you, but as an investment for investment purposes, that's the location is more important, and you can do any way you choose to invest in real estate. That becomes a kind of a key component.
Exactly. But how much more can you actually build in the UAE, right? So you said that a lot of developers did stop their projects during COVID, but they're starting to pick up again. Like I was sharing with you just before our call that I live in Marina, and right across my home, there's a new marina being built right now just across the pond. So first of all, they're gonna block my view. That's a shame. And two, I mean, who's gonna be living there? That's like, for me, buildings are literally being constructed on a yearly basis or even like on a monthly basis here, and they grow like mushroom, like crazy. And more specifically, for example, Expo 2020. a big project being built in the UAE, and it's amazing to the government, to the economy. A lot of people will be coming here during between October and April to enjoy that huge event. But what's going to happen to the expo after the expo, and what's going to happen to these complexes after these big events? Is it sustainable enough?
You asking me to start,
yeah.
or
I'm asking you as
you're putting me on the spot first.
You're the real estate expert, Rami.
I got carried away.
No, I mean, listen, it's a great question, and it's a question that's on everyone's mind. And I always get asked that, even when I was working at the MAC or First Group, and from all the investors saying, yeah, listen, you're selling Expo, but what happens after Expo? And I think there's one thing that Dubai is always good at, is they have a lot of things that they still haven't announced yet, right? And there's many talks about, they just announced UAE citizenship, right? And that's something that they're already giving out to certain people, which they can open up. And I think there's a lot of tricks they can get out of the hat. They have a lot of cards that they still have to play that they'll bring in. And again, everyone talks about, yeah, but I look at the buildings and they're empty, and I say, okay, how is that possible? So, I live in City Walk. When I moved in 2 years ago, I'm like, okay, listen, this is deserted. I'm the only one, and now my building is full. And I say to myself, there's people coming in, and there's a lot more people now coming in from COVID, and you just need to believe in the fact that, listen, with COVID happening and people being able to work a lot more remotely, do we believe that the future of Dubai and all this supply that's coming online, will it be filled by people coming from around the world saying, listen, this is a place I want to be, whether it's to work remotely or to live in? And again, the beauty of Dubai is it caters to so many people around the world, whether you're in Europe, whether you're in Asia, whether you're in the US. I mean, it's unbelievable. And when you look at all the supply that's coming online, is there enough demand that you can get from these feeder markets in Asia, for example? And the answer is yes. Can you get enough demand from feeder markets like in Africa, in Europe right now? I mean, this year, if you look at the top 10 nationalities, it's no longer, it's switched. You have a lot of European countries that are coming in. France is now top 3. And there's a lot more people that are saying, listen, I want to come here. So, and again, where can you buy? You mentioned in front of you, I know which one you're talking about. You're talking about the beachfront, Amara Beachfront, which I know very well. It's a fantastic product. It's beautiful. It reminds me of Miami. Where can you buy an apartment that overlooks the sea for $500,000 anywhere in the world of that quality? You can't. I mean, it'll take you a while to find that. And I think, yes, there's going to be a lot more supply coming on, but I think, there's going to be, they'll always find a way to get the demand. To answer your question on Expo, I've heard many things that they're going to keep it as a continuous center where people could come in and explore different histories about different countries that are exhibiting there. There's going to be the airport, the biggest airport in the world right there. So that's going to bring in a lot more attraction. I mean, you look at Dubai South today, they've built buildings, they go there, the occupancy is around 60%. And that's still not, the whole area hasn't even developed yet. So, I don't worry about Dubai finding a way to generate demand. I mean, this city caters to so many people around the world. So, it's something I'm confident about it.
Well, I really hope so, honestly, because I don't want the buildings to ruin the great view that I have. So might as well.
So it's funny because so at the end of the day, it's location, but it's also value for money. So as long as you're in a quality development where what you're getting in return for what you're paying makes sense, and the location makes sense for you, then you're going to have demand kind of coming in. So you need, of course, with continued expansion, you need an influx of people, and the government, I'm sure, are doing different things to ensure that kind of flow continues, because they are investing heavily in the infrastructure. But it's no longer a build it and they will come. Now it needs to make a lot more sense. And so what Rami was saying earlier about the committee that's supposed to control the oversupply and make sure that the projects that are coming online are aligned with kind of the vision and these kind of things. So it all kind of comes back to the fundamentals of supply and demand. So if you're building something that doesn't make sense, prices are going to go down until that equilibrium happens. If you're building something that does make sense and the value proposition is there, then people are going to keep coming. And so you also have a mix of investment purpose and end user purpose. And so those are also two different kind of groups that you have. And now you have even vacations home becoming a larger part. And now with the remote working that's becoming more popular globally and the remote work visa that they've issued here. So people are starting to be able to come spend a year here, get an affordable visa, and then contribute to the economy, rent the apartments, etc.
100%.
I'll add to that as well. So sorry there's one thing that's very important to note is when you look at the yields that you can make in Dubai real estate. I mean, right now the rents have dropped, and you still can comfortably make anywhere between 4 to 7% net on property here on residential. I mean, where can you do that? Tax free, right? So when you look at that, it's to go back to your point, as you were talking about from an investment point of view. End user, we talked about the benefits of living in Dubai and the value for money and everything here. But again, when you look at, the benefits of actually as an investor and the yields that you can make here, they're phenomenal. And they're unnatural for a city like that. So value for money and return on investment is actually very good here.
Interesting. Thanks a lot for your input on this. And I want to bring back that article that you mentioned, that came out yesterday, where the rent prices are increasing by some even owners are asking for 10% increase in rent for the new cycle, and that for me is crazy. But it begs the question: does it make sense for now someone to rent an apartment, or is he better off putting that down payment and purchase his own home? And this is why we want to answer together that main event question of today. Is it better buying or renting an apartment? And it doesn't matter if it's in the UAE or outside of the UAE. We do have some members of the audience that are not in the UAE, but as an overall kind of answer, this is what we'll be tackling today. So Ramsey, maybe before digging deeper into that question, what would be your top 3 tips for someone that is lost into that big question?
So there's a number of things that kind of go into deciding whether you should buy or rent. So buying doesn't necessarily make sense for everyone. So first off, there's a certain time frame that you need to be considered to kind of live in your house. So if you're only going to be here for a year or two, then the costs involved will probably make that not worthwhile. So you should continue to rent. If your kind of family and things are going to be, your size is going to be evolving, you're expecting to grow, and you can't afford that home that you need for that, whether it's in kind of 1, 2, 3 years, then again, maybe you should hold off. But the biggest thing is you need that down payment, and it's plus the other costs, which a lot of people forget to consider. So it's not just that 20%; it's also the land registration fee, it's the agent fee, it's your mortgage fees, it's the interest you're going to pay on your mortgage, it's the appraisal cost, and then even after ownership, you have your annual maintenance contract, you have the service charges. So there's a lot of other things that go into it beyond just kind of that purchase price or that down payment that people tend to forget about. So that's the biggest component. So your timeline and your ability to kind of meet those payments or meet those cost obligations. These are the 2 biggest things that go into it. And then the third piece, which a lot of people tend to forget, and this applies kind of across all asset classes and comes back to our philosophy of risk-based investing. So psychologically, are you comfortable kind of doing that? Is having a 20 or 30-year mortgage, is that going to weigh on you a lot? Are you kind of, if you don't have job security and you're worried about making your next mortgage payment, that's something to kind of consider. So it's also the psychological factor of it as well. Or is owning a home going to give you that peace of mind in the long run? And whether it makes financial sense or not for you, it gives you that psychological or mental peace of mind, which is also very difficult to calculate, right? So the numbers are very important, but it's also more than the numbers, especially when it comes to a home, which can be sometimes an emotional decision.
Absolutely, and we did also release a poll in the Zoom. So if you guys have an opinion, would you rather buy or rent? Please feel free to give your opinion on that. And Rami, I want also your opinion on this later on. But tell me, when someone purchases a home, like when someone is actually in the process of buying a home, it's not only the down payment that you will be putting aside. So there's a lot of cost to it that comes. I won't say hidden costs, but people don't actually consider them part of their budget. So what are these costs, first of all, and what are the other things that you should be looking out for while choosing and purchasing a property, not necessarily a home, but any kind of property?
The main costs are, transaction costs that Ramsey was just touching on. You have to pay a commission. There's if you're buying it through a bank, you're getting a mortgage, then you obviously there's mortgage fees. You also need to pay the valuation fees. And those are just the setup fees, and then you need to pay your 4% DLD, which is paid to the Dubai Land Department to register and get the title deed. So all those kind of stack up in the beginning, and then on the long term, obviously you have the main maintenance charges. But for me, it's when you're buying a home. Ramsey mentioned something which is it's more of an emotional decision, right? You're buying your home. This is something that you think about. Okay, you might care more about the view. You might care more about the size. You might care more about the location stuff. So it's more of an emotional decision. But I also think some people tend to think when I buy my home, it's not an investment. I kind of disagree. I think buying your home is an investment. And for a number of reasons, which we can get into, but I think right now, even when you look at it, and right now, and if COVID taught us anything, is your home is very important. And I think with rents increasing, you're going to have to look at, and with prices increasing, you're going to have to say, if I don't buy now, when am I going to buy? And I think right now is a fantastic time to get on the property ladder. Interest rates are at a historical low. And a lot of people are getting it, and that's why you're seeing transactions are going, and a lot of people are refinancing. So the people are saying, listen, now is a great time to buy, and I think buying a home allows you to preserve capital, build equity, saves you from paying rent. And when rent is increasing, it makes sense to buy a home because that you're going to be paying that, and that's money just down the drain. And I think a lot of people say, yeah, but I'm paying rent, that frees up my capital. If I don't own a home, that frees up capital to do something else. But people tend to say that, but what is that something else? Do you have access to that something else? Do you have the time to manage that? And I think people, and you have access. A lot of accessibility to investment isn't that easy and straightforward, which is what you guys are beautifully doing. You're opening up the access and making it easier for people to participate in other things. So and it also you're not asked in Dubai specifically. This is a Dubai issue. At least every 1 or 2 years, you're asked your landlord, because it's an investment market. Landlord says, "Oh, I want to sell it," and then you have to move, and all that money that you paid on furnishing and then any fixtures.
Yeah, moving costs also. So you need to move. You need curtains. You need to do the deep cleaning, pest control.
Exactly.
100%. And I think Sorry, go ahead.
No, please.
No, I was just saying, as well as in our part of the world, there's an affinity to buying real estate, and people say that it builds. We're taught from when we're young, at least my age, it builds generational wealth. Buy a home. The first thing you should do is buy a home, and we, at Stake we agree, and it's part of our mission to make owning real estate a lot more easier. And introducing fractional investment opens up to a lot more people, and part of our roadmap is doing a lot of things to make sure to make home ownership a lot easier as well.
I do want to talk about fractional investing in a bit, but I can see from the audience that there is a big split between buying versus renting. Actually, more than 70% of the attendees today would rather buy than rent. But for just a couple of minutes, I want to play the devil's advocate on the renting part, because everybody has been praising the buying part. But all right, assume that you have that down payment sitting ready to put in order for you to get your mortgage. And then what about you actually invest that down payment into the SP 500, for example, and generating returns on that on a yearly basis? So what would you say for someone who would think like this? Obviously, it's not the wrong way to think, but what would be your counter argument for someone to put his down payment into an investment fund rather than actually buying the property?
Yeah, so so that's what the opportunity cost is, right? So that's how you should be thinking about that. So let's say I have, just for easy numbers, I have 100. Is that I'm going to put it to my house, or am I going to invest that in the S&P 500? Obviously, depending on when you invested in S&P 500, you probably would have made a lot more money than investing in real estate. but it comes back to the other factors that are involved. So does it make sense? It all comes back to, does it make sense for you? And we think of it in terms of kind of like the risk index or the risk tolerance. So it's not just, are you comfortable with that risk? It's, does this decision make the most sense for you? And the way you should think about all of your spending, not just investing, is what is the opportunity cost? So if I save $1,000 a month on my rent, after 30 years, I have $1 million. So but if you invest, if you only have $1,000 and you don't have that 100 to purchase, then of course that decision is made for you. But if you have that 100 and you take it out and you put it in real estate, again, it serves different purposes. So you're buying your primary home is still an investment, and it's arguably the biggest investment that majority of people are going to make for themselves. But it shouldn't be considered part of your kind of investment portfolio, because it's not an asset that you can easily sell and then buy back to benefit from these kind of price changes or increases in the market. So renting gives you that flexibility. If you're someone who's more opportunistic, if you love the risk, if you feel like if 2 or 3 years I'm going to be making more money and then I want to upgrade, and then 2 or 3 more years I'm going to make more money, then I'm going to upgrade again, then I mean, that's the argument for renting, right? If you're only going to be here 2 or 3 years, then you shouldn't buy, you should rent, maybe buy in your home country if that's where you plan on going back to. So it's a lot of factors come involved. And then here, the other thing that applies to most markets is tax. Here, we don't really have that. So that's not a consideration. But depending on where you're from and if you have to pay taxes in that country, usually the mortgage payment or the interest portion of the mortgage payment is tax deductible. So that's another kind of complexity that comes into calculating kind of the opportunity cost. But so if you look at it from a pure numbers, the situation is going to depend on each person, the area, the location, the building, the time, et cetera, et cetera. But once you add in that kind of the other factors or the non-tangibles, then each person becomes like a little bit different.
Thanks for that.
I couldn't agree more. Yep.
Yeah, and I do want to come back actually to the point that you made, Rami, on the fractional shares on investment that you can put within property. So assume that person doesn't have that down payment to put towards his property, and he cannot afford to be invested in real estate. So what are the alternatives for him that's available today in the market to be invested in the real estate market in general?
So for us at Stake, home ownership, we want to make that easier, and that's definitely part of our roadmap. And if you do invite me to another webinar, we'll discuss that as our part of a product on our roadmap, because it's something that we're very excited about. Right now, what Stake does, thank you. Right now, what Stake does is it really makes real estate investment easier for investors, and it opens it up to people who either one couldn't afford to invest in real estate, or couldn't get a mortgage or whatever the reason was, or just weren't comfortable in putting all that equity. As you mentioned, there's a big outlay in the beginning, whether it's a down payment to put down or getting that mortgage, just weren't comfortable in putting all the equity into one asset class. So what Stake does is it opens fractional investment, and what it allows people to do is you come online, you're able to have the freedom of selection. We onboard you. You can invest in Stake in under 3 minutes. You come on, create an account, go through the onboarding process, which is a KYC process that we need to do because we're regulated by the DFSA. And in under 3 minutes, you can buy real estate. So we open it up. We give you the freedom to choose which property you want to invest in. And then you can come in for as low as $500. So what we end up doing is, let's say we select a unit in downtown, a 1-bedroom, for $1 million dirhams. People can come in for as low as 2,000. Let's say someone comes in at 100,000. They own 10% of that property. And then once we close the funding amount for that property, we register it as an SPV, special purpose vehicle. It's a company in the IFC. And then people get a share certificate that equates to how much they own in that property. And the title deed comes out in the land department in the name of the SPV. And what we're seeing, I've sat down, as I mentioned, with investors over the years who have loved to be part of this asset class and want to be part of this asset class. But the biggest hurdle in this is that it's very capital intensive. And I think, a lot of people say, okay, listen, I'd love to, are scared of getting into the real estate investment or this asset class because of the fact that it entails a lot of capital to be invested. So what Stake does is it opens up to people to come in for smaller shares. And what we're seeing is people are loving to do this. They're doing it on a monthly basis now. So it's part of what they're part of their salary they're putting aside and putting it into Stake. Because what we do is we get properties that are rented. So our investors are able to make returns on a monthly basis immediately. So as soon as the property is closed, we start paying dividends on a monthly basis. So it's kind of a second income for people.
All right. Thank you, Rami, for that intervention. And I want to be conscious of the time and leave a bit of time for Q&A actually. So we'll jump right into it to this. So first of all, thank you so much, Rami and Ramsey, for your inputs on that great discussion. And we definitely want you back on. I'm gonna call it the show, right? This is a podcast. We want you back on the show, Rami. Very, very soon.
Look forward to it.
So we'll jump right into the question. All right, I think we have a question for you, Rami, directed there to Stake. So how do Stake is helping in reducing the cost for retail investors to enter into this asset class? Since there are 4 types of costs charged by the company: acquisition fee, 1.5%, yearly administration fee per investment value, that's 2.5%, exit fee and exit incentive fee of 15%. Aside from the normal property acquisition and maintenance costs. So what would be your answer to that?
So, I'll say that, as a platform, operating an investment platform that is regulated, there's a lot of costs that we have to incur, to be able to sustain the business and actually operate under a regulated license. So, I'll start off with the last question, or the last fee that's talking about the incentive fee of 15%. Actually, this aligns us with our investors. So what ends up happening is if we're incentivized to sell the property at as much of a higher price as possible, because that's when our biggest fee comes into play. Because we say, okay, listen, we have a property, if it's only appreciated 5 or 10%, we want our investors to say, listen, we want them to make the most money, because if they make more money, then we do. So this fee is something that we've put to align ourselves with the investors. And if you go to any of an asset manager who's managing an investment on your behalf, there's always a success fee that's part of it. In terms of the running fees that are charged, it's part of actually setting up the SPV, where there's a lot of costs involved with that in the DIFC, and we take care of all the headaches. So when you look at the beauty of our platform is it's hassle-free. So we have people investing in Singapore, we have people investing in Malaysia, we have people investing in the US, in Canada. We're not allowed to onboard people living in the US actually. We have people from actually 54 different nationalities have invested with us, and the reason why they can do that is because it's hassle-free. They do it from their phone. So to be able to take care of all of that through a third-party property management company, there's fees in that are that we incur. So part of this hassle-free experience and this digital experience and this regulated experience has fees that are involved, and that's why we've charged this. Now, in terms of accessibility, we're giving investors the ability to get into real estate that is below market price, and allowing them to do that fractionally. So that's where the main push from Stake is listen, for people who want to buy into fractional real estate and want to buy into good deals, there's a lot of costs involved with that come in from putting them onto our platform, from sourcing them to getting them ensure they're rented, vacancy risk is low. So that's where the fees are, where the costs are going.
Thanks, Rami. So we also have another question from the attendee. It's less of a question, more of a statement. So I would like to buy, but not in Dubai, given the poor quality of the buildings. My building is 10 years old and falls apart, and management takes the excuse that it's an old building. My house in my country is much older and in better quality. So actually, it does, well, there is kind of a good point to that statement and I actually want your opinion on it. Does the heat plays a big part in the maintenance that you need to put towards the building and your home? Because that kind of weather that we have here is not very similar to any kind of other countries, especially like in Europe or or in the Americas. So would that affect, if you want, the maintenance of the building and their quality and the deterioration basically of this building in a much faster time?
To a certain degree,
I mean, I'll just go ahead, Ramsey. Sorry.
Yeah, so to a certain degree, yes. But so that's also where it comes back to not all real estate is equal, just like not all companies in the stock market are equal, not all stocks are equal, not all bonds are equal. So it very much depends. So yes, we talked about location, but it's also the quality of the build and then the value for the money you're getting. So if you're 10 years old is not really old in general in the real estate market, maybe in UAE it is considered old, but you need to also remember that the market here is continuing to evolve and it's still quite young. So now as we mature, you're going to probably see higher quality builds coming on board. And that's not to say that there are no high quality builds already existing. So it all comes down to value for money, location, quality of the build, and if you're willing and able to spend that to get that. So it's all kind of tied and related, and that's why we talk about the maintenance cost is also something that's important. And so it's not just the service fees that you pay, it's what are those service fees actually being used for, and that's where the homeowners association also comes in. So you need to do your diligence before buying a physical property, whether it's your primary home or not, to make sure that that building or that villa community or whatever it is, the other investors or the other homeowners are paying their dues on time. The homeowners association is making sure that those dues are being spent on the things to maintain the quality, to maintain the build. And then just like real estate anywhere else in the world, you need to reinvest in part of it on a regular basis, right? So you need to make sure that the service elevators and replace elevators every now and then. You need to make sure that the external facade is right. You need to make sure that the corrosion from the salt water or the humid air, that's also being kind of repaired and replaced every now and then. And so it's making sure that the money is being spent in the right way to basically make sure that that is the right place for you. And so it's not always easy to do that if you're not really an expert in it.
There's something I also want to add to that, Ramsey, which is fantastic that the land department did is up until last year, if I'm not mistaken, or the beginning of this year, the homeowners association was with the developers. So all the management, all the service fees were controlled by the developers. Recently, they've taken it away and they've given it back to the homeowners, who control and choose who will maintain that building, who will maintain the apartments, the common areas. And I think that was a fantastic move. If you look at some of the buildings, actually, the service charge dropped when they were doing that. So to the person who asked that question, I would look into who the homeowners association is in that building, because right now it's been transferred away from whoever was running it before to the investors or the owners of those properties. So, the excuse that the building is old, please don't accept that. And I actually think this is where it's very important that before you do actually buy a home, you need to buy from a reputable developer. I mean, I can take you to buildings that have been built by, Amar, Nakhil, Dubai Properties, Miras, especially with Amar, that are over 10 years old, 15 years old, and they're actually in amazing condition. You really need to make sure that you're buying with a reputable developer. But please, if you are living in the building that they're giving you that excuse, go after and find out who the homeowners association is and ensure that it's with the homeowners and raise your complaint.
Thanks, Rami. All right, we still have 3 more questions in 5 minutes, so maybe let's start. So should I buy my primary home in the UAE? Is it worth it? Should I lose my job and have to leave? So what's your opinion on this?
So for me, it comes back to your risk tolerance. So if you think that your job is at risk and you're going to be forced to move, that's a personal decision. That alone shouldn't determine if you don't buy, because even if you leave, you can still rent it out, and you just need to make sure that the rent is able to cover the mortgage and the other costs of it. So it comes back down to a personal choice at the end of the day, provided the math makes sense.
Same here, I agree. If you see UAE as a home, over the next 5 years, then definitely it's a place to buy. And by the way, actually, there's if you do lose your job, they're changing the rules, and they've changed the rules. They're giving people a lot more time than they used to before. It was if you lost your job, you had 30 days, and everyone was worried and stressed. Oh, what do I do? They've made extending your visas and getting visas in the UAE a lot easier, so that even if you do lose your job, in the unfortunate event that happens, you have enough time to find another job and service the mortgage that you have on the house.
Cool. All right.
And so I think you kind of answered the next question about the overheated market and a lot of hype. So so I think it's the same thing similar in real estate as it is to the stock market. It's hard to try to time the market. And so it depends also what your purpose is. So if your purpose is to live in it and to live in it for the long term, then it can still make sense. Obviously, you shouldn't overpay for a property, but then again, it comes down to location, value proposition, and then your personal situation.
Absolutely. All right, one final question. So if I do have the money to buy a house in its entirety, is it preferred that I approach stake and split my money between two or three houses instead? Diversification within real estate. So what do you think of this, Rami?
I mean, this question is music to my ears. It's exactly what we preach. I think, and Marwan, I think the person who asked the question, he doesn't work with us. So, this is a great question, because, we believe in the main ethos behind our business is, real estate is a fantastic investment, but, investing in it is an annoying process. So we really think that how you invest in it and doing it via stake allows you to diversify. So if you're buying real estate as an investment, I don't see why it makes sense to put 1 million dirhams into one property. You're locking up that capital into one apartment. There's a huge vacancy risk. You're not, if your tenant leaves, if the area is no longer popular, if God forbid anything happens, you've locked up that capital into one property. So, our advice is, listen, if you do have 1 million dirhams, or you have 10,000 dirhams, or you have 20,000, whatever the amount is diversify across different properties. And what we do is we always try to put properties on our platform that are in different locations, that have, that are rented, that allows the investors to make money from different locations with different incomes, and ranging between 4 to 7%. Eventually, part of our roadmap is to start putting international properties on the platform. One of our lead investors is a developer in the United States. Another investor is a developer in the UK. So definitely will allow people to diversify, not just in Dubai, but cross-border and international.
Yeah, and it's great you said that, because diversification doesn't just mean diversification in one asset class within one country. So that's whether you own one property or 3 properties in one place, that's still kind of, it is more diversified, yes, but it's still relatively concentrated. So you should, whatever your kind of decision or strategy is, depending on the size of your portfolio and the hassle that you're able and willing to go through, the more diversified, the better, yes. So absolutely invest in more than one property if you can. And stake obviously allows you to be able to do that, but also diversify, make sure you're diversified beyond just real estate. So you need equity exposure, you need bond exposure, you need commodity exposure. And the difference between the proportions that you are investing in will very much depend on what your financial goal is and what your risk tolerance is. So the more time horizon you have, the more you should be invested in riskier assets, again, provided it makes sense for your profile and your risk tolerance. The shorter time horizon you have, the less you should be diversified in, or the less you should be invested in riskier portfolios. And so you should assets, and the more you should be invested in something like bonds or like defensive real estate or other things. And so that's something that you need to kind of monitor and adjust your portfolio over time as you approach retirement or whatever the goal is that you are investing for. And also based on the economic situation that you are in. So just because what's happening today, you deploy your capital accordingly, in 1 or 2 years from now, that same allocation won't necessarily have the same risk profile And that's where our investment framework at least kind of re-optimizes your portfolio automatically to make sure that you're always at the optimum risk, at the optimum potential returns at that risk level. And so, of course, real estate is a super important part of that, but diversification globally and across asset classes is extremely important, especially when you're looking at this for investment purposes, not just end user or primary home.
Thank you so much, Ramsey, for this. And with that, that's the last question that we have for today. So I really want to thank both of you for your time. Would like also to thank all of our viewers, since it's a show, so not the attendees.
We should do this in front of a live audience next time.
Yeah, exactly. Why not?
Listen, 100%. I really enjoyed this. I enjoyed your show. It's great.
Thanks, Rami.
Thanks a lot, Joseph.
More than happy to have you back on the show next time.
Thanks a lot.
But as I said, we're doing this every single month. Every month, at the beginning of every month, we're bringing a leader in the industry to discuss multiple topics related to their industry specifically, and we'll be announcing the lineup very, very shortly. So again, thanks for both of your time. Thanks for everybody who tuned in, and we'll catch up next week for the next StashAway Academy webinar. Thank you so much.
Thank you very much, Joseph. Appreciate it. And then just a note to all the audience, if you guys do have any other questions that you want to ask, of course, you can reach out to either StashAway or Stake on our support channels, whether it's WhatsApp, email, or a phone call. Just visit our respective websites or applications, and then you can get in touch with us directly.
There's one more question.
Or visit our office.
Yeah, absolutely. Actually, one more person said, any promotion for people who attended today? Yes, please do reach out to us. I'm more than happy to give you a promo code, at least from the StashAway side. Rami, would you be happy to give anything from the Stake side?
100%. Yes, sure. 100%. Right. Reach out and we will accommodate for sure.
Thank you so much, Rami, for your kindness. And thanks a lot for everybody to tune in. Have a nice evening.
Thank you.
Take care. Bye-bye. Thanks a lot.
Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. So you can start on your financial journey right now.